Hey guys, welcome to today's training. We're going to go over a fast and easy way to mark up charts using the 4-hour zones. This is just a quick and easy strategy I learned from my mentor Papa Pips. Be sure to follow and subscribe to his page on YouTube. So let's get started. So I switched this to the candle chart, and I've got CAD JPY up on the 4-hour time frame. We're going to do all these on the 4-hour time frame. So what we showed you in a previous video was learning to mark zones using candlesticks. But now what we're going to do is make this even simpler. But sometimes with the candlesticks, people get a little confused, and the zones aren't exactly very precise, and you're not sure if you picked the right one. So we were going to just simplify this, and we're going to come up here, and you see these two candlesticks. We're going to click this drop-down menu, and we're going to click the line chart. And then we're going to come over here, and we're going to grab our horizontal line tool. I've got it set to purple because I have a white background, so I want to be able to see it. And let's get started. So we're going to look for areas in which price rejected and moved swiftly away, but we're also going to look for multiple touches. So areas where price came up and we can get multiple touches by putting our lines on our chart. So let's go ahead and throw one right there. Let's see. We'll put it right there. We're going to grab another line. We can put one right here if we wanted to. I like to lock them in. I know you always hear me on the chart, on the training videos saying lock in your lines. It's just so they don't move, because when you're doing a lot of charting, things tend to move in. So we had 1, 2, 3 touches right here. So we'll go ahead and lock that in. So we're just going to zoom out a little bit. And let's see, so when we zoom out, we can see that we have multiple touches. 1, 2, 3, 4, 5, 6 is the area where price came to and rejected from. We're going to come up here and zoom out a little more so we can get a good idea about price. We're actually going to come and slap a zone right here. And the reason we're doing that is we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So these are all high probability areas in which prices come to and either rejected from moving upwards or moving downwards. So next we're going to come and we're going to slap that one on here. We've got touch there, several touches there, several touches there. So if you zoom out, we've got a bunch of touches right there. If we really wanted to, we could bring it down a little tighter right there. We've got some touches there, near touches right here. Some break, retest, touch, 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 touch. It just depends on how tight you want to make it. So if you want, the more touches you're trying to get, you can put it there, and you're getting even more touches. Let's see if we can, yeah, so that's probably a good one. And then just for fun, we'll come up here and we will throw one right there. And I'm really looking for areas in which price came to, rejected, and moved away. We don't really care so much about these little moves. What we care about is when we're getting a lot of touches and we're getting swift moves away in price. So let's go to another one. See how easy this works. Okay, so we'll just start here. Let's start with the most simple ones, right? So this is an easy one, right? We see multiple touches there, 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 there. We could go right here. As we can see, touch, breakthrough, touch, 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 retrace, rejection, up, touch. So this is an important level right here. And then we had touch, big rejection. And we'll zoom out a little bit. Oh! All right, there we go. Got it back somehow that time. So here's one right here. As you can see, we have a bunch of touches. Price pushed through, broke, and dropped, right? You probably would have done one right there as well, because you have tons of touches right there. You have price coming into this area, lots of touches. We can come up here, and we see once again we have lots of touches. And we come up here, and we can see lots of touches. So the reason we're doing this is so when you come to look at a chart, you can see that when price comes up into these areas, you don't want to you might be saying, oh, we made a nice move here, I'm looking for a reversal. But what you don't want to do is you don't want to buy going into resistance. Now, if this comes through, breaks through, retests, and then comes on, then yes, we'll go to the next zone. But what you don't want to do is think, okay, I'm going to catch this reversal and then take a buy, and then all of a sudden you slam into resistance because you didn't see that price had rejected a lot over a long period of time, almost a full month in this area. And so you would have been caught on the buy side, and then we sell down. And so it's just a very, very simple way. And then when you go and you drop it to candles, look what you get. You see that your candles are coming right into here. So we use the line to establish an area of rejection, and we use the candles to refine it. So you could move it. You could go as far as to draw the boxes like we taught in the previous video. But this is just a really fast and easy way to build your zones and find your zones. And so we'll go back to the line chart right here. And so when you see it, you're like, oh, okay, well now I know not to buy into resistance or sell into support. So let's go, let's see, we can do this on any chart. We do this all day, every day on any chart. So we've got Euro JPY here, we're on the 4-hour time frame. We can drop that line right there. If we wanted to, we could come up here and drop that line. If we're looking for another one, we see prices right here. We could probably get 3 touches plus some, right? 1, 2, 3, 4, 5, 6, 7, 8. Who knows how far back, right? So we go right here. And then you can come in here and you can fine tune it, right? So that way, like this way, and then when you build your zones down on the 4-hour or 1-hour time frame, you can really see the candle rejections. We're going to come up here, we're going to slap that one on there. And it just lets you know that, like, when you're, especially like, let's say you took a buy from right here. Great buy, right? You bought right off the bounce of support, and you're moving along and you're thinking, oh man, I'm going to continue to ride this uptrend. You want to at least be very aware that this is an area of rejection. There was lots of rejection in here, and that this zone is going to show you, hey, maybe I should pull off, 50% profits, 75% profits, and then let that other 25% ride, instead of saying, oh, I'm going to catch this whole move just to have this entire thing reverse on you and hit you out at break even. So let's just move right along here. We could put one right there. We could even go, I think somewhere around this area. We can go there. All right, so we'll get that. And we'll just go out a little more. Yeah, we're just finding very easy, simple to find rejection areas. I mean, you can even do it like that, right? And then maybe come in here if you really wanted to do that, just so you get an idea. We got some consolidation right here. You push up, came back up, rejection. Then you can see where you're getting all these nice reversal areas, so you know what you should be looking for. And this just keeps it very simple. We'll do a few more here before we close out the video. What I don't like to do is do this on very choppy charts. Like we can see right here on the line chart, just by looking at it, we're in an uptrend right here. You can find some zones, but why stress yourself out trying to mark up zones when you see something is very obviously trending? You could mark up one right here, but then you just start to confuse yourself. Possibly over time you'd have seen that. Maybe there. I don't really like that one, so I would have something like this. Obviously you see this one up here. This is a pretty obvious one. So just to keep it nice and simple. So that was not my favorite markup, but you can see here, if you come down to the past, you can see we hit a double bottom right there, as well as a nice resistance or support area, and also a resistance area right in there. So you can mark up those zones. So it's very, very easy to see what those zones are. If we want to, we can go into the candles, and then you can see right there, right? So had you marked this in the past, you would have seen this in the future. So when price was coming down here in this obvious 4-hour downtrend, you would have seen, oh my gosh, I'm not going to necessarily take the sell from here. I mean, you could, but you would know that at least if you're trying to ride this sell trade down, that, hey, we've stalled out down here. Why have we stalled out? Well, you look left and you see that this is a high impact resistance zone. So we want to be prepared for a possible reversal. And what did price do? Came down here, teetered around this zone, reversed up before breaking the trend. And this was a loose trend line that I drew. Breaking the trend and then starting its way back up. Do a few more. I'm just going to kind of click around, see what we can find. I like to find, I mean, you should be able to spot these very, very quickly. If you're not spotting them in the first, 5 seconds of looking at a chart, I would just go ahead and move on to the next one. For new people, maybe take a few minutes to see, but don't force anything. So right here, we can see that as obviously a high touch point area. 1, 2, 3, 4. I mean, if you wanted to, you move it up a little bit and you get even more touch points. I would take one here. And then I would come down to, or I would go up to that one. You see there's consolidation, break, retest, up. Go there. Maybe even go right there. Actually, you get even more touch points. So see, look how many touch points I got, that line that we just drew. So you could just see this and say, oh man, like we're at resistance. Like if it breaks out and runs, okay, cool, you can catch the break and retest on some of these, but why would you take buy opportunities right here? That would just be foolish, At least, let's say it breaks and runs. Okay, maybe you missed it, but you know what? What if it broke up above, came back, and then did this? You'd be pretty mad that you got stopped out on that. Because it was an obvious reversal zone. Now, if it broke above here, retested, gave you an impulse candle up, okay, yeah, we can take the buy and run from this zone to this zone, but we're not going to want to buy at resistance. We want to buy at support and sell at resistance. Just the same as we're not going to want to, we see this obvious downtrend. We have a nice impulse, but we come into this zone of support. We're not going to want to sell here we're not getting a premium price. We're paying a premium price. We want those discount prices. And so we would want to sell from here. We would not want to sell from right here necessarily. Maybe continue down, but what happened in this scenario is we reversed and price respected this zone and continued to move up. And we'll do one more. Let's find one that's like really clean. Oil's usually pretty clean. Okay, so we'll take this right here. So we're still on the 4-hour time frame. We'll go ahead and slap this one right there. We'll do, look how easy this one. Just look how easy and simple it is. I mean, you can see this one so quickly where to draw these zones, right? So you can, honestly, I think you could do, there's one right there. As we, I'd probably even fine tune that one, honestly. And then I'll bring this one up a little bit. And then, yeah, you can see this one right here. All right, so we got rejection there. And look, you can see we put those from back there in the past. And then as we come here into the most current past, you see price respected, reject, respect, reject. And we consolidated in this zone, we broke up, came and tested these levels, also very strong area of support at the time, and now this area of support has become an area of resistance, rejection. So rejection, rejection. We come up, push, we reject, and oil's just been on this salt down at the moment. And so what will we do with current price? Okay, we're going to take current price, we're going to come in here to the zones, and we're going to slap our trend line, or zone line right here. So we're going to put one there, because we got 1, 2, 3, 4, and then we'll put one right here, because we have 1, almost 2, 3, reject up, push down, 4, reject, test, push up, reject. So now we're in this consolidation phase. So what we would be looking for just using this method, if you're just using something as simple as this method, is we could look for a buy right here, a long position, if we have some sort of indication that price is going to, I mean, this is a higher probability trade, right? So we're looking for something right here where price comes into what we're calling support. Mark it up right there. So it comes into support and possibly we bounce off, or maybe we break through and sell. So you've got this right here. So you could take this trade to the upside, possible upside trade if you had some sort of reason to do that, or we could take the short trade. So we could take the sell. So if price comes below here, pushes up into this zone, and we see an impulse or rejection candle from this area, we could sell it back down. And unfortunately, 4 hours not letting us go see those lows. I think there's some lows way back over here. We could jump to the 8 hour to get some more lows, right? Because oil's in a downtrend, we want to keep looking for lows. There's one, that's 42. So there's a zone at 42, and we're just using the past to educatedly predict the future. I don't know about that giant candle right there, but you see, you kind of get the gist of it. So as we move higher, we could come out here, and these are like 2013 prices, right? So look at all this rejection, rejection. I mean, you could have predicted the fall of oil just by looking at these zones back then. Then you could have a support right here, and that zone, you know, the zones are holding up. Probably done it there, and we will go maybe like right there. And look at that consolidation. So as we came into here, we rejected down. So just something to consider. I highly suggest, especially new people, start here using the line chart to find just very simple, easy, fast zones. Start on the 4 hour time frame to mark those zones up, mark them, and then you'll drop to the candlestick chart and fine tune those zones. And as you get into lower and lower time frames, so look at this as we go to the 1 hour time frame. Look how almost so precise those zones are, you know, so precise. And then we could even use those candles, trap that consolidation right here. Consider this one of our zones that we marked up with the black and yellow, and just a very important level. So give that a shot. Hopefully this helps, and we'll see you on the charts.